Hello, everyone, and thank you for taking the time to review the real estate market analysis for Santa Clara County, California for June of 2009. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro, and I'm also the president and CEO of Whitelaw & Sons Real Estate Services. If you'd like to get in touch, you can find all of my podcasts, monthly market analysis and real estate articles at my website at www.soldbyrobert.com. You can get in contact with me directly by email at robert@soldbyrobert.com, and you can call me on the phone at 408-852-0525. If you prefer online chatting, you can use AOL Instant Messenger, Google Talk, or Yahoo IM with the screen name The Rebel Broker to get in touch. For Skype users, use the screen name Rebel Broker. And referrals are always appreciated. If you or anyone you know is interested in buying, selling, or investing in real estate in the Silicon Valley area, please feel free to give me a call. I'd love to help out in any way I can. Finally, even if you're not interested in Silicon Valley real estate, if you're interested in buying real estate anywhere in the United States, and you want to find the right agent for your needs, give me a call. I'll be happy to go through the process of interviewing folks and finding the agent perfect for your needs. Now let's go ahead and jump in and take a look at the numbers for Silicon Valley. For Santa Clara County, sometimes called Silicon Valley. And we can see that the inventory numbers have been performing pretty well for us, which is always good news. And it's actually pretty good news all the way around. We've seen some smaller communities that aren't doing quite as well as the county in general, but sales are up from last year, listings are down from last year, and inventory is down from last year. All of these numbers are heading in the right direction. So let's start off with sales. Sales are up 28.62%. That is 262 more homes sold in in Santa Clara County in 2009 than in 2008. So from June to June, 2008 to 2009, we increased our number of homes sold by 262. That's great. That's a grand total of 1,189 homes sold in Santa Clara County. And as far as new listings are concerned, we had a decrease of 21.04%. That is 416 fewer homes listed in June of 2009 than in June of 2008. That gave us a grand total of 1,561 homes listed in the month of June. Now, inventory is down a whopping 32.44%. That is down 1,971 homes from the same time last year, and that is staggering. That is a fantastic development. Really what was keeping this market so crazy was just the huge number of homes to choose from. So we currently have 4,105 homes on the market. Over 4,000 homes is a little bit much, but we're only 105 over 4,000, and for my money, anything under 4,000 is a good thing. So we're heading in the right direction as far as that number goes. Now, here's a number, and it's at such a healthy level, it's staggering, and I hope we can maintain this in the months ahead. Now, as all of you know, I like to compare sales to inventory to give us two ways of looking at how the market's currently shaping up. One is sort of how long it would take to sell off everything currently on hand. So if you take inventory and divide it by the number of homes sold, that tells you if everything froze right now, how many months would it take to sell off the inventory we have? And that stands at 3.45 months, and that is perfectly reasonable. That's a very respectable number, and it's great that this number has been moving in this direction, particularly when we compare it to last month, where it was at 4.5. So we've dropped a full month, quote-unquote, and how long it would take to sell off the inventory from last month to this month. And what's great is this is a trend. I mean, this isn't just a one-off. For the last 3 or 4 months, this number's been trending this direction, and it's been fantastic. Another way to look at this 3.45 is to think of how much competition there is out there. So for you sellers, for every home that's selling, there are about 3.5 homes on the market trying to get sold. That's pretty close to being a reasonably balanced market between buyers and sellers. There are still a lot of folks taking really amazing deals out of the marketplace right now. We'll see how that breaks up a little bit later on in this particular presentation. Now let's go ahead and move on to what we're seeing in these numbers just recently now. This isn't year to year. This is month to month, going all the way back to December of 2007. Now you can see the general trend on inventory is down. The general trend on listings, down. The general trend on sales, up. So these are all great trends we're seeing in Santa Clara County. In fact, what are we seeing here? On the change in solds, just from a month to month, so just from May to June, we see a 20.47% increase in the number of homes sold month to month. That's 202 more homes sold in June than in May. Listings increased 3.04. That's 46 more homes listed in June than in May. Inventory went down 7.79%. That's 347 fewer homes on the market in June than in May. So all of these numbers are heading in the right direction. This is really great news. Can we learn anything from these numbers about what we're going to see in the coming months? Well, let's go ahead and look back to June of last year. And you can see that the trend was relatively flat. So we saw rising inventories, and then in April and May and June, things sort of stabilized, and we got a little bump in July, and then they continued to go down. We're seeing precisely the opposite. Now, the reason why I'm so excited about these numbers is this when you see trends like this that are exactly opposed to the way they were in a previous market, that usually means we're in a pivotal market time, which means we're seeing a big change. Now, the last time we saw numbers like this was when everything was going down the toilet. Do you remember back in those days when what we saw comparing year to year on the trend side of things was completely opposite? You know, one year you had things going up, and the next year everything was going down. These trends are good to see, particularly in areas like inventory. So let's look at inventory. Last year we saw inventories increasing prior to June. This year we see them decreasing. If we look at sales in June, you can see that there was a relative ramping, and we're seeing a ramping now as well in June. So that's actually sticking more in line with what was going on last year. But we've also seen a pretty steady decline in listings, with then a decline from April to June last year. We're also seeing that here as well. This all sort of fits more into the time of year that we're in right now. So a lot of these are seasonal influences, but man, we've seen a much more dramatic increase in sales. The numbers are just bigger and better than last year. So I think there's a lot of encouragement we can get from this. Now let's go ahead and take a look at see how much of our market's being made up by some of these properties that were in distress previously. Now this is the short sales and foreclosures numbers. Now last month, short sales made up 11%, foreclosures made up 40%, and conventional sales made up 49%. So better than the previous month. Again, this is something that's been trending in the right direction for a while now. Now let's take a look at this month. Short sales were 13%, so a little bit of an increase. Foreclosures, 34%, so a little bit of a decrease. Overall, conventionals overtook the halfway point and took us up to 54%. So over half of the deals that went down in Santa Clara County were totally conventional in terms of whether or not there's a short sale and foreclosure involved. So that's also good news, at least in general terms of a recovering home market. Now, let's go ahead and take a look at home prices. This is clearly one of those things that is really high on the list of what folks care most about. And you know what? This really fits in with what we've talked about in previous presentations, that really the pivotal thing that was going to define a turnaround in this market was going to be some of the basics of economics, which is supply and demand and price points. Now, we had so much of a supply out there that people had so many choices, they were just gravitating towards cheaper homes, and the thing that had to give was the price, and that's what did it. Our inventory finally went down once we saw these prices go down. You can see that we peaked out in 2007 at just shy of $1.1 million for an average price in Santa Clara County, which is absolutely nuts, with a dramatic drop-off from then till 2009. So again, this is just a month of June, going all the way back to 1999 for home prices. And let's see, the average sales price was $688,484. Sales are down 23.34% from last year. That's a $233,665 drop. So we're basically seeing home sale numbers that take us back to the early parts of 2000. So 2002, 2003, right in that ballpark is where these prices are living. A lot of folks are theorizing that these numbers could go down. If you want to hear a little bit more discussion about where these prices might be going and some concerns by various smart folks who anticipated our current down market, you might want to listen to my last podcast or my last live real estate reality show, which was recorded just a couple of days ago, and where we talked about those things. So there's a few podcasts I've got out there that are talking about this. You might want to take a look at those, see what you think, see if you buy into it. Folks like Peter Schiff are good names to look up on Google and see what they've been saying. They called it, so the folks who were right are probably the ones to listen to now as far as considering their word above others. He's definitely a guy you want to listen to. He's got a couple of books out right now, and he writes a lot of articles, and he makes a lot of guest appearances on various shows. So do a search on his name, and you'll definitely get some decent information. All right, now let's go ahead and talk about the highs and the lows of the market. The highest priced home was in Los Altos Hills. Not a real big surprise there. The address is 13193 La Paloma Road in Los Altos Hills. The home sold for $7 million. It listed at $7.125 million and sold in 7 days. Now, another reason to really call out this particular property isn't just because of the higher price of the home, but the fact that it sold in 7 days. This really, and there's no funny business with this particular listing. I went back and checked. This home wasn't relisted. They haven't been trying to sell this thing for a long period of time. This is simply a situation where the property was priced right for what it offered, where it offered it. And I know that sounds crazy to some folks that there could be a home that's worth $7 million, but where this property is located, the quality of the property and the amenities it offered, when compared to other properties in the area, was a great deal. And so it sold. It was priced right, and it sold fast. Lowest price home was at 250 Lewis Street in Gilroy. That home sold for $110,000. It was listed originally for $199,800, and it was on the market for 322 days. And if I'm not mistaken, there was also a period of time there when it was listed for higher. I think it first sold for 200 and something thousand back in 2005 or 2004. So that's a shame there. Gilroy's really taken a hit. But at least in some ways, we're starting to see recoveries in some areas. All right, now let's go ahead and take a look at the home prices in recent months. You can see the trend here is pretty hard to miss, and it's actually a pretty interesting trend. We saw definitely a drop-off here, but in the near term, we've actually seen a bit of a recovery in the average price. Now, this shouldn't indicate to you that you should be increasing your asking price, the average price for a home. A lot of people might interpret this data this way. What I think it reflects is that the return to sales activity has happened at all price levels. So while average prices were sort of huddled down at the lower end because we were seeing so many people focusing on short sales and foreclosures, as short sales and foreclosures make up less of the overall number of homes being sold, and we've already seen that's the case, right? We're back up to 54% of the homes being sold being conventional properties. What we're seeing is that we're seeing more activity at the higher end. A $7 million price tag on a house may seem outrageous, but if in the old market that home would have gotten $8 or $9 million, that's a good deal for somebody. Obviously not for someone who can't afford a $7 million house, but you see what my point is. It's not that we're seeing a true movement in the average price of the home. Well, we are as far as how average price is calculated, but I think what this reflects is more activity at the higher priced homes. We're seeing them represented more in the homes that are being sold, if that makes sense. Now, I'd love to be able to put the median price up here for you, but they don't calculate that for the county in the way that I run these numbers. So unfortunately, I can't get the median out of that because that would tell us where these prices are clustered, where these homes are clustered that are being sold. Are we tending to see more at the higher end or the lower end, or is this really showing sort of a midpoint where half the homes that are sold are above that price and half the homes that are sold are below it? Because that's not what this number tells us. This tells us just what the straight average is. Now, the average sales price, again, was $688,484. The change from last month, so from May to June, average price increased by 6.61%. That's a $42,710 increase. Again, sellers don't run out and say, okay, last month I was asking $100,000. Now I should be asking $142,000. That's not what this number means. And of course, any real determination of what your home should be going for, you should be working closely with your agent to do a market analysis to determine that. What this, I think, is telling us, what the takeaway from this slide is, we're simply seeing more activity at the higher end homes as opposed to let's all adjust the price of our homes that are currently for sale. All right, now let's go take a look at the days on market. This is an increase from last year, and that makes sense. I mean, we're selling off a lot of properties. Our inventories are starting to get going. We've got some properties that have been on the market longer than others. This actually increased to 21.92%. That's 16 more days than the same time last year. I think it's good to calibrate yourself at that amount. I don't think there's anything unreasonable with saying to yourself, you know what, it's going to take about 80 to 90 days to get your home sold. I think if sellers are out there trying to calibrate themselves to what the right number is, go ahead and let that be your guiding number. And I'll tell you what, if your agent cannot get your home sold in that amount of time, ask why. If you can't beat the average for days on market, you need to find out why. You may have the wrong agent who may not be doing enough for you. All right, now let's go ahead and take a look at days on market just over the past months. Again, this is going to might show some seasonal changes. Days on market rarely does, although the season can sometimes affect it. But with the large sample of numbers we've got here, this is actually a pretty good indicator of what we're seeing as far as averages are concerned. Now, between May and June, it was a 3.49% increase in the days on market. That's only 3 more days to get a home sold this month than last month. So that's you can see the general trend. Things have been going down. Now, one thing you will see, and some people might question why when we have such increased sales and reductions in inventory that we're getting these higher days on market numbers. Well, remember, we're now selling off some homes that have been on that market forever. The lowest priced home on our analysis, remember, it was on there for 322 days. So the bottom line is that we need to be thinking in terms of we need to be thinking in terms of see, now a phone call can just throw me completely off track. I'm just gonna let that thing ring. So the takeaway from this is that okay, when we see the increase there, we're selling off inventory that had been on the rolls for a very long time, like that property that had been on the market for 322 days. So when sales start to increase and we're digging deeper and deeper into the available inventory of homes and selling them off, we're going to, as a result of that, sell off some homes that have been on the market for a really long time. So when you start to see the recovery happen, you sort of get this artificial bubble of increase in days on market because you're just selling a lot of things off that have been on the market for a long time. Does that make sense? Okay, let's go ahead and move on to nothing. That is the end. That's it for the presentation on days on market. Now, if you'd like to get in contact with me, I'm not going to go through all of this stuff item by item again. I'll just put it up all on the screen. Now, I do appreciate you taking the time to listen to what I have to say on these subjects, even when I sound absolutely confused like I did on that last slide. But if you'd like to get in touch with me, use any of the ways listed here. I'd be happy to help you any way I can. You might want to check in on my website over the next couple of months. I have a couple of special projects or offers I'm working on that I think might get some folks excited, and I hope you're one of them. Thanks again for taking the time to listen, and I will talk to y'all next time.